So what happens if we have insufficient documentation? The IRS gives us two options, a new income certification or a retroactive certification. So let's look at the pros and cons of both. So let's say we have this household, they moved in July, property manager verified all their income. The state says, hey, we're going to come out and inspect your files. They come out in February and they say, oh, you have insufficient documentation here. There's an 18-year-old in this household that you forgot to verify his income. And you're like, oh, that's no good. I better fix that. They're going to have to issue Form 8823 because they found it wasn't corrected yet. But the IRS gives you two options. You can correct it by doing a new certification. So basically, the old certification of July is no longer valid because it was incomplete, and you do a new certification dated March 3rd, and then you fix the compliance going forward. This is a bad approach because you're out of compliance for that whole time period, and it spans the close of the year. So you'd never want to do new certification. What you'd want to do is you'd want to instead do a retroactive certification where you send it to the business owner or whomever it is that you need this information from, and you say, hey, to the best of your knowledge, as of July 15th, 2011, we know it's March now, but as of July, what was this person's anticipated income? And you find out what their anticipated income was as of the original date, and you compare that to the income limits in effect as of that original day, and you get everything true and correct as of July 15th, suddenly there is no period of noncompliance here because you've corrected everything back to the actual effective date. So you've corrected it, you're happy, but you'll still get issued an 8823 because the state agency found something on their visit, but it's been corrected. But again, this is one of those 8823s I'm not going to be really concerned about because there is no period of noncompliance here. Everything is ship-shape once it's all been corrected. And then the third example, this is the way you actually want to do this, is you want to, before the state notifies you, as we've talked about before, come do an internal inspection or a third-party inspection, get somebody out there to look at your files. You do your retroactive before the state notifies you, but still using that true and correct date. And in this case, the state comes out, they look at the files, they say, awesome, you have everything you need. I see that you had an issue, but you corrected it, and there will be no Form 8823 issued in this example because, again, you've retroactively fixed it before the state agency came out or before they notified you, to be absolutely clear on the requirement, and everybody's happy in that case. So once again, the key here is internal inspection. You want to make sure that you're looking at your files. If the state's coming out every 3 years, you want to make sure you're looking at your files every 2.5 years, or whatever it is to make sure that you're doing at least some monitoring to make sure something's not getting missed. And I do recommend using a third party occasionally, whether it's us or somebody else. There's a lot of qualified people that do this, just to get another set of eyes on it because maybe your company policy is missing something, and if it's the same people looking at it, you might never catch it. If we did that retroactive certification and we found out that 18-year-old was making $100,000 a year on an internet startup, well, I don't know what your income limits are in your area, but most likely that's going to put your household over income. And that can't be retroactively corrected then. You may have gone back and gotten the data there, but all you've done is prove that that family is over income. So in that example, we were assuming that it was just a documentation issue, not that the family was actually over income. Let's talk about over income. The key is the first thing you want to do when the state